Hello everyone and welcome to TTT Markets. I am Fotis Papatheophanous and today we are going to discuss how market conditions decide if a trade works or fails. Many traders believe that a trade works or fails because of the entry, the level, the signal, the timing. But in reality, the same trade can work one day and fail the next, not because of the setup changed, but because market conditions did. So in this video, I will show you directly on the charts why the same setup produces different results, how to identify good versus bad conditions, and how to adapt your trading to the environment. Let's simplify this. A setup is just a pattern, but a pattern only works when the environment supports it. So instead of asking, is this a good trade? You should be asking, is this the right environment for this trade? Let's go to the chart. So let's zoom out. What do you see? Let me do this so you can see better. We have trending phases right here. It went from 1.03 all the way up to 118. We have ranging phases over here. You can see this is a different phase. We moved from trending to sideways market, a range. We have volatile moves. They happen during the news, and we have very slow periods. This is important because your strategy does not perform the same in all of these environments. Let me show you this during a trending phase. You see the market is doing a series of higher highs and higher lows. We have clean pullbacks and we have a respect of the structure over here. Now let's take a typical setup, a pullback entry. So this is your first pick, it comes down, it comes to support, this is your entry, stop below, and then it continues the trend upwards. In this environment, momentum supports continuation. Buyers are active. Structure holds. So the trade works. Not because the entry is perfect, but because the environment supports continuation. Now look at this. Same pair, same time frame, but different environment. No clear trend. Frequent reversals. Weak momentum. Now take the exact same setup to buy on a pullback. Does it work? Well, probably not. But what happens? Price doesn't follow through. The structure is broken. The trade fails. It's the same idea, buy on a pullback, but the result is different. Why? Because the environment is different. This is the key point. Most traders blame the setup, but the real issue is they are applying the same strategy in different environments without adjusting. What defines market conditions? Let's make this practical. There are three main things to look at. Number one, structure. Is the market trending or ranging? If it is trending, we are looking for continuation setups because they will work. If the market is ranging, well, mean reversion dominates. For example, in this environment, Bollinger Bands will work. In a trending environment, Bollinger Bands will not. So number one, structure. Number two, momentum. Are moves strong or weak? If there are strong moves, well, there is follow through. If it is weak, we are going to have fake moves, even fake breakouts. Number three, volatility. Are candles expanding or contracting? In high volatility, we have faster moves and potentially higher risk. In low volatility, we have, like here, we have slower moves and less opportunity. Let's apply this again. Let's look at this area where momentum, the trend, is slowing down. The trend has started strong, but then momentum weakens. And you can see when momentum weakens and we move in a range-bound market, what happens? The size of a candlestick becomes smaller. So continuation trades stop working. This is where many traders get caught, because they keep trading the same way even as conditions change. But let me show you in another pair. Let's switch to another market. Let me show you in dollar yen, that is supposed to be more volatile than the euro USD. So let's look at a trending move right here. You see over here we have a trend. What happens? Pullbacks. Do they work? Yes. This is not because you have a perfect entry. This is because you have a trending market, and in these conditions, this setup is working. You have consistent momentum, that's why. Now let's take a breakout or continuation trade, as you can see. So in this environment, breakouts, they work. You can buy a breakout of the high. Momentum continues. Trades reach targets faster. So this environment supports the idea. But what if we move to this environment? What happens? Does the same principle work? Well, no, the price is unstable. The breakouts, they fail. The reversals happen quickly. What happens? Well, you see over here, we have a breakout and then the price reverses. Your stop gets hit. There is no continuation. So this is exactly the classic trap, because the setup looks the same. You are doing the same thing that you did over here, but it is a different structure. The condition is completely different. So why traders struggle with this? Well, most traders are trained to focus on entries, indicators, and signals. But very few are trained to read environment, context, market conditions shifts. So what they do, they apply the same logic as I showed you. For example, buy pullbacks. They are doing this here, they will do it again over here. So they apply the same logic everywhere. And then they are expecting consistent results. And of course, they get inconsistent performance. What should you do? This is the thing. Before taking any trade, ask, what is the current market condition? Trend or range? Does my strategy work in this condition? Is momentum supporting the idea? If the answer is unclear, you either reduce risk or skip the trade. You can see across both charts, whether it is the dollar yen or if it is the euro USD, the concept, the pattern is the same. Good conditions, trades work smoothly. Poor conditions, trades fail quickly. Your job is not to force trades. Your job is to align with conditions. Keep this in mind. Trades don't fail because your entry is wrong. They fail because the environment doesn't support them. If you focus only on setups, you will always feel inconsistent. But if you learn to read market conditions, everything becomes clearer. Because in trading, it's not the setup that decides the outcome. It's the environment the setup is placed in. Thank you for watching. I am Fotis Papatheophanos. See you in the next video.